None of VPM Partners, Bob Kendall, or any of its officers, directors, employees, other personnel, representatives, agents, or independent contractors is, in such capacities, a licensed financial advisor, a registered investment advisor, or a registered broker-dealer. None of VPM Partners or its personnel gives investment or financial advice or makes investment recommendations, nor are any of them in the business of effecting trades or directing client equity accounts or giving futures trading advice tailored to any particular client situation. Nothing contained in VPM Partners broadcasts, on its websites, or in its written materials constitutes a solicitation, recommendation, promotion, endorsement, or offer by others described above of any particular security, other investment product, transaction, or investment. Copyright 2014 VPM Partners. All rights reserved. Terms of use apply. Reproduction, adaptation, distribution, public display, exhibition for profit, or storage in any electronic storage media in whole or in part is prohibited under penalty of law.
Good morning, everyone. It is Monday morning. There's a lot to cover today. Pretty interesting world we're living in, I must say. The way that these markets are acting, the way that everything comes together that we've seen over the last 5 years now since the crisis just gets more interesting and more dynamic as it goes. So as many of you read the commentary, there is we had about 3,600 plus orders come out, and anyway, we're going to review everything. We're going to talk about some of the configuration of the market, what that means. Let me bring my partner in, bring in Mitchell here real quick. Morning, Mitch.
Morning.
Yeah, so we got a lot to cover today, and we're going to be focusing on at least the first half hour and a lot of the details. So if you folks have other things to do in your life, you can move on at least getting enough information about what's going on in the markets. And the phenomena that we're seeing from the standpoint of a VPM database, from the markets themselves, really had me snapping back to 1982 to 1987. Those were my formative years in the markets when I was learning about all the things we know about today. I think it was 1983 that we started researching the PPMs and started understanding trend following, and was really evolving with that bull market. So had an interesting flashback as I was looking at everything yesterday. I actually started early yesterday morning researching quite a bit of stuff, and it was just kind of a onslaught of flow of thought that started coming out, and as I started to look through this thing. And one of the things I want to mention, Mitch will help me to remember, I want to talk about the NASDAQ, because I remember after 2000 I thought, man, the NASDAQ will never see 5,000 again. Well, try 4,300 right now, and not that far from being at making an all-time new high. So there's a lot of things going on in the configuration of the markets, and there's a lot more to it than just pure economics. You need economics, but there's more going on in the restructuring of the markets that I have noticed over the weekend, and been starting to build dialogue on this show about what's going on here. But these are phenomena that you're witnessing amazing history right now, and that's why nothing seems to make sense, because it's never happened before, and this type of environment's never happened before. So whether the central banks of this planet have engineered the ultimate bubble, couldn't tell you that, but right now the bubble is growing, and part of our job is to participate and make what we can during those times, and that's exactly what we're seeing. So let's go ahead and get started on the market analysis here, and I'll bring Mitch back in here shortly. We're going to go over the entire database of what's going on. Right here we have the daily charts, and they're pretty flat right now from the standpoint, while we moved up over the last several days, There is some new objectives here that I have on the screen. Let me just bring this up, make sure I'm not in the way there. That's good. But 2018, 2054, 2076 is some of the objectives here as far as the upside goes on the marketplace. And this is Fibonacci objectives that have come into play. I'm just take this down for a while. You'll notice that previous objectives have, for the most part, they're met about 65% of the time. When these patterns are put out there, they end up being met. Sometimes they just fail, and the patterns that evolve are just too unrealistic. This one here is in context with a number of things, and my hope here today is I'm going to go over the general review of how we look at it. Then we're going to dig into what I was telling Mitch earlier. I was starting to write the commentary yesterday, and I fear by the time I developed the concepts and everything that I needed to bring to you folks to give you an overview and a context of what's happening from a technical viewpoint, that it was going to be even confusing or not. It was going to be a lot easier just to show you what I'm talking about. And I know most of you don't really care about the why. Some of you do. Most of you just care where the market's going, and that's what I'm going to cover here. But the overview from right now, the daily charts don't have a lot of upside momentum in there. They still are projecting. I've talked about this number, and I'll continue to talk about it. This 1973 number is the target. I mentioned, I don't know, sometime last week that there was a 60% probability to getting there. We're 10, 12 points away. We've been up to, today we hit 1963.74. So, we're less than 9 points away from there. And as I've discussed before, a 1% move is a lot of numbers now. So we're looking at 19 handles for a 1% move. So it's not going to take much. We're talking about a quarter to 0.3% move, and you're there. And so it's not going to be much to go on. I think some of the key numbers that I've walked about, and I mentioned in commentary last night, there's a range that comes off of a expectation chart that and a probability chart that I came up with that is suggesting that this 1973 to the 1989 level is going to be the point where we might see some interesting, maybe see some consolidation set up. And when we go through the order run that we had today, I think you'll see the types of things and what we're buying will give you some context of exactly what types of things are being bought here and where the market's where the money's being deployed. So let's go and take a look quickly at the weekly chart, and same story as last week, only we were at 0.48, now we're at 0.50 on the PPM1, 0.45 and 0.34. So this intermediate trend is continuing to expand, and this is, as I mentioned last week, a long ways from the end of how this market will look when a top is coming. So we're a little ways away from that. I wish I could bring up some of the screens. I don't have a copy here. I just thought of a way I could have had a copy, but I don't. Of some of my worksheet, some of my mad scientist stuff that I did, so you could kind of see that. I'm going to see if I can come up with that. Maybe while Mitch is talking, I think I have an idea. So anyway, like I said, the expansion of this trend from a trend follower standpoint, we're continuing to see these moving averages expand away from each other, which is one of the signs that you're not near an end, but in the expansion phase of this trend. So when I was talking about 1982 to 1987, one of the things that happened then was the market would go up, it would consolidate, go sideways, regenerate itself. The correction would happen internally. Otherwise, similar to what we've had happen recently, is the small caps and mid caps saw a pretty substantial correction. Some of the momentum stocks also saw a corrective phase, and you're really looking at an internal correction with the large caps leading the way up this time. So, we've talked, I think it was maybe 2 years ago at National Conference that I mentioned that I thought the large caps would lead on the upside. They didn't lead really. Last year it was a small cap, mid cap, and now we're finally seeing that leadership, which is typically the end or the final part of this run when the large caps start to run. That was the case in 2000. That was the case in 1987. That was the case in 2007. We also saw the large caps lead the way, and not only the large caps, but pretty much the largest capitalization of each index. In this particular sequence, we're sitting here at a historical high. We are not seeing that same, phenomena that happened in the places I just mentioned, 87 and in 2000, and then in 2007. We're not seeing the same type of rotation. This is not a narrow market advance. As a matter of fact, it's broadening as the market is accelerating to the upside, which is very similar to what happened more pre-87 during that big rally, as I mentioned, more of a consolidation phase. So we'll take one look here at the monthly, and I will go through this and let's see, did it not? It did not change. I've seen this happen before. No, I didn't click on it. That's why. So this is 182, 149, and 106. So even this monthly trend is accelerating to the upside. You would think this is, in all the years, this most compares to the 94 to the 2000 level. I don't have the 1987 on there, but let me just see while we're doing this to see if I can. Let's go back 40 years on this chart, and we'll reload this so we can go back a bit. And this was now we can. That's 97. I don't know if I can get it to view up exactly like I want, but there's 87. So let's see if we can. I'm going to see if I can get some of these numbers to pop up so we can get this perspective. But this market did this several times. This is a monthly graph that I have here. We could break it down and go into more of a minutia, looking weekly back in these days. But one of the things that happened here, the momentum. I was just talking. We're at 180. We got up to 290 in this. You got some amazing momentum, and this is right before. This is back in 87, 86 here, where the market went into somewhat of a sideways mode before it accelerated to the highs. And I remember back in the day that on the Dow Jones we were heading away toward 3,600 for the first time, and one of the great long-term predictors at the time with Bob Prechter of the Elliott Wave was called crazy by Marty Zweig and a bunch of people on the old Wall Street Week. They almost laughed him off the show that the Dow Jones could ever go to 3,600. I guess that maybe most of those guys are in the grave now, so they're long gone. But they absolutely had to eat some crow before they left the planet, and they were dismissing a lot of these characteristics that Prechter was talking about. Unfortunately, Prechter has become like Harry Dent. He's a perma-bear, and he's since the 2000 crash, everything's going to zero. And that while you could point at a lot of social trends and talk about a lot of things that have happened and some of this massive debt buildup, you're not really going to get to the point of having this market top out just yet. Those are big, large mega trends like that are very hard to predict the end of, and that's why, from a trend following standpoint, you want to look at where we are in different phases. And like I said, on a monthly basis, going back to reality here. Let me zoom back out. Going back to reality is that you have you have this expansion occurring. In fact, it's possibly the most historic expansion that I've seen in my 34 years of doing this. And I've never seen this type of numbers, and the regeneration over and over of the database cycling. And of course, since 1997, I've had the availability of the database I have to look at, and we're going to go through some of the details there. But this particular trend that we're looking at on this screen here, this is just an amazing trend. And I think I have a graph I can bring up that I used last night to do my analysis, and that might be helpful from the standpoint of being able to do this. I'm hoping that I can get some kind of text generator so I can put some of these numbers on the screen so it'll be easier for you to understand. But there's one of the things I want to talk about just before we move on to going into the big analysis is I want to go through the general review here of also on the interest rates real quick, and then I'm going to go to all technical, talking about why I talked about S&P 2200, actually 2290, really 2300, which is a phenomenal number. Say that out loud 3 times and see what your thoughts are, whether they come up to ridiculous or not. But that's another 12-14% on the upside. That puts us up a 20% plus year, and we're looking at last year, a 29.30, and then we're looking at just 50% in the last 2 years. And if you go back to the 09 level, this is pretty phenomenal. And when we get in talking about this, there's very potential another 18 to 22 months of this sequence before we'll see another big correction. I think we've got something to deal with yet this year, but I don't think it's going to be a big correction. But I do think we'll see some rotation in the markets later this year. So we'll see where we can get what the dynamics present. And some of the things I may do based on what comes out of this conversation today is I may actually come in and I guess continuing through commentary to develop some of these numbers and the concepts. This week may be totally focused on this market event. I think it's appropriate considering the magnitude of what's happening in my view here. And when most people are trying to pick a top right now, that's not me. That's not what I'm seeing here. And I know I've been talking about this since we started this show. I think this is like show 26 or something. So for the last couple months, I've been talking about how this trend is not over. And then we saw 3 weeks ago now, we saw a lot of the indexes, the bigger indexes, the SPY and some of these others start to flow in. And, it was a little nervous. Last week was a pretty good week, up 1.38, I think, percent for the week on the S&P. And we're continuing to see this thing just trek higher, and it doesn't seem to want to stop. So I think what I'm going to do here is I'm going to go over, I want Mitchell to go through the rotation of the, let me bring up that, and let me bring Mitch back with me for a minute here. So Mitch, what I want to do is bring up and go to the dash. Oh, nice. Guess I'll have to. Doesn't matter if I can log in this account, right?
Yeah, it doesn't matter.
Sorry about that. But a couple of things that we need to address here. I got to tell you, if you're not using and looking through these funds, I notice there's not as many hits as I would expect. There's a lot on this homepage because it forces you to look at it. But look through this information that we're going to go through today. There's some pretty helpful things from understanding where we are at in the marketplace, and to help you to better advise your clients as well. So Mitch, why don't you go ahead and go through this, and I will.
All right, so getting started here, as Bob mentioned, the sectors are the content that loads up first. And you can see across the board we had some pretty significant buying on each of these sectors. So you can see that we had about 7 to 10% on each of these sectors. And again, if you're not familiar with these charts, just by clicking on any one of these high-level sectors, it'll bring up all the groups that fit this. So when it comes to the raw numbers, on the stock side, the most purchases that we had were actually in the financial space. And you could just see across the board, we're just continually adding to our current exposure when it comes to the stock market. I think the greater story, as Bob mentioned, though, is on the fund side. So if we go over to the second button here and click on funds, you'll see that this is really where all of the purchases were at. I did a quick look of all the orders that we had this past week going into today. On the optimized trade system, about 1,800 of them, of the orders, were divided between stocks and funds. Of those 1,800, 1,437 were just to mutual funds alone. So the vast majority of the activity that we're seeing this week are in mutual funds, also within ETFs. So if you're using any of our premier portfolios, I'm sure you had orders this morning. The all-weather ETF strategy had 2 orders, 2 brand new buys, in addition to some reallocation sells. Same with some global equity orders. We'll go into that in a minute. But what I wanted to dig into here on the mutual fund side, you see that we had this large bar right here, 25% new exposure. So of the mutual funds, we had 25% of the database have brand new buys on the U.S. equity funds. So that actually may not seem like a lot, but that actually equates to be 917 mutual funds had orders in this space. So if we click on this and drill down into it, you can see that we're really adding to our current exposure on all these mutual funds. It's pretty broad-based, but especially in the small to mid-cap spaces where we're finally starting to take on some new positions. A week or so ago, we had talked about on the small value, we had a large tranche come through, and we're having another large tranche come through today in that same space. So across the board, lots and lots of mutual funds. So 2/3 of all the orders within the system were within this U.S. equity fund space today.
Yeah, real quick on that small cap, as I talked about earlier, this is where the rotation in the market happened. Now that correction has occurred, and we're seeing a re-entry of small caps and the mid caps coming back into the marketplace, and this is I think this is really significant because of the leadership that's coming out of the large caps.
Yep. Yeah, I mean, you'll notice here that we do match up just about across the board in this 70 to 80% range across all these different sectors. The value side is still catching up on the large value. Same with small growth. That's still trying to catch up. But really, I mean, we're seeing quite a bit of catch up in this space as the investment exposure is coming onto these portfolios, and we're seeing lots of new entries in this. The other thing worth noting is if you look higher up on this chart of the different investment groupings, the other large percentage of orders that came in this week were for the international equities. So you see here across the board, these foreign investments are seeing new buys in the SMID space, as well as also in the large cap. So we're seeing quite a bit of activity across the board, regardless of what's taking place overseas. Our system's calling for these brand new buys. So follow these orders. It's not comfortable, to say the least.
Well, yeah, but that's the point of what Mitch was just saying, that a buddy might just say if it's an easy trade, it's never a good one. So if this feels really hard, this is probably the best trade you're ever going to make, just because of the fact that you think, gee, is this buying all this stuff up here at historical highs. The rotations there, you look at the patterns. We can maybe bring up IJR when we come back to the screens and the analysis screen, but these patterns are set perfect for a whole nother leg up. It's not to be ignored, let's put it that way. Depending on the type of exposure you have, there's a lot of catch up to happen. So as Mitch mentioned on like the some of the things we're seeing is a rebalancing of some of the orders, like in the case of the all-weather. In the all-weather, what's happening there is it's downsizing the relative risk across the board and diversifying what we call the fully diversified. So when you get an order like what you see here today, and I think it also happened in Global 4.
Yep.
So we downsized all of the positions that were already on there. So we took some profits, redistributed them to some of the new items that we're buying, and then therefore we've reduced the exposure of trades that have been on for a while, and then we've redistributed all of the capital across the board, which gives you a fully diversified look. So, I guess if you have to pretend you're back at the MPT days and you're owning everything anyway, right, Mitch? I mean,
that's right. Every day's a good day to buy.
Yeah, and but this is what's going on from the standpoint of the dynamics of the markets, and that's why we're spending this time on here today to talk about this.
Going further into these charts, if you take a look at the weekly research, you'll see we had some orders in some pretty key areas. It's worth noting that we've further reduced the current loss on the position on gold, so we're now down about 6.5%. A little less than that now with today's gains in that space. Had a brand new buy in silver, which I also thought was interesting. So we're seeing some more traction in that precious metal space. And then if we scroll all the way down here to the bottom, you'll see also that brand new buy that we had in IJR that Bob mentioned. And we could also pull up the 2.0 system, and we could show you some of the orders that we're seeing when it comes to these premier portfolios. But I looking at it right now, I think the only premier portfolios that didn't have orders this week were the bond-based premier portfolios. All the rest had orders of some sort, and most of them had orders in addition to reallocation sells. So we're seeing that move to diversification. We're fully invested on these portfolios, and we're ready for that next leg up.
Yeah, and there's another point here as well. Even though we're buying here, we're really diversifying all the risk of the portfolio too. So we're downsizing that risk, as I mentioned a minute ago. Sound a little redundant, but that's what's going on here. So you've got a fully diversified portfolio, and some of these foreign assets that we're seeing here, they've also been lagging. And I'll bring up my favorite chart here in a little bit as far as looking at what's going on. We're still not seeing any underperformance by the U.S. markets versus those, but that I don't think we're going to see that, but I do expect that we're going to continue to see this thing flow on as far as the trends go.
Yeah. Let's if we could, let's jump over to the 2.0 system now, and there's a few things just wanted to point out there. And I'll go ahead and log in on this part. So again, if you have those premier portfolios pulled up on your end, you'll see that there's orders across the board. So again, going to the Global Equity Strategy 4 here, which is the recommended global equity strategy portfolio out there. You'll see that we had the brand new buy in IJR and then these reallocation sells. So we've diversified our positions in it. You'll be fully invested at the after the orders went through today. So right at the open, you should have placed those. Same with the all-weather ETF strategy. You see that we're almost fully invested on the equity side. We're still waiting for, I think, the last small cap value to come on into this portfolio. But you see at this point we're invested in all the other style boxes within this portfolio. Jumping over to the research side of things, if we go to the left-hand side here where we have this market overview, you see that we've taken on new positions within these broad groupings. We have positions within basic materials, conglomerates, and services that just came on today. So at this point, the only two areas that we're not invested in when it comes to these broad regions is the consumer cyclical as well as the capital goods. The rest show these brand new buys. Bob also mentioned in commentary that the VPM Universe also had a brand new buy.
Yeah, I want to cover that for a minute while we're here. So real quick, while Mitch led me in pretty well here. This universe chart, if we go over there, one of the things that I noticed, now we have the buy last week, not this week, but it was already on. but we're already up 1.2%. This chart represents the entire everything in the VPM universe. So it tells you that the average, and this is an average price index. So this tells you that the average of all of the items in our database is projected to grow. And one of the things that I noticed, which is part of this scenario, that everything, when you get a cluster of things pointing to the same thing, I'm going to get Mitch out of the way because he's going to be right in the way of some of my stats here. I'll stay over on the sidelines here. But yeah, so the one of the things that we want to look at is the trade profile. The trade profile is showing that we're 10 days of 211 holding period. The projected mean is a 17.69% gain. So this is for this index to go all the way to 56, which is pretty phenomenal. We're looking at when these trades come in, the average loss is 4 versus a gain of 17, and this is on a massive diversification from what's happening in the assets. So when I saw this, that 17% in the average price of everything in our database coincided with just every calculation I'm going to show you here shortly that I went through. Everything points to this 12 to 14+% gain that's about to occur. When you get multiple events, I mean, is maybe out of the 5 or 6 things that I hope to talk about today, you know, all those things are going to be wrong. I think they all point to the same decision, the same outcome, and that's what I want to. That really caught me yesterday when I started digging into. Okay, we got 3,600 new buys. What does this all mean? And start digging through the database and start looking at, really digging into the depths of what is likely to occur. Everything. It was amazing, actually. Almost everything pointed to the same numbers, no matter what I did. It was very interesting. Okay, Mitch, you can take back over again.
All right. So just wrapping up here again. If we go back to the research section, I just want to show you where we get these numbers at. So under research, all stats. Before we get to the all stats, here on this research page, you see the breakdown where we have the 69% position within the database. So if at any point you're curious as to where to find this, here's that stat right here on the total symbols, 69% long at this point. After today, with these fresh buy orders on the market level, the sector level, we're now 83% invested in the sectors, 56% invested on the groups. And then going to the all stat page, you'll see the breakdown when it comes to the orders by the weekly 1.2 and the 3.2. So here you see current entries, 3,333. That's a mouthful on the weekly 1.2 system, compared to the 100 exits that we had on both the 1.2 and the 3.2, and the other 300 buys on the 3.2 long. Now those charts that we put up every week, that we started off with showing you the breakdown by sectors and funds. We're looking at the optimization of trades, the optimized trade system with each of those, whether it's the sectors or the mutual funds. And that's why it's broken down a little bit more. It's usually about half, which makes sense. Half are to the 1.2 or half to the 3.2. But clearly, I mean, we're seeing some significant traction across the board, and I think, as Bob had mentioned before, it's sort of unprecedented at these levels. And I think that's all I got as far as the rotation, Bob. If you want to continue with the analysis on the overall market.
Okay. I'm going to take us over to the back to the New York Stock Exchange here for a minute. Just to,
okay.
I want to set up a couple screens here and be able to bring up some of the things that I think is going to be helpful. And while I'm poking around on this other screen, I think I was hoping for a different image. Actually, let me just see if I can find it. I thought I left it up here. Yeah.
Bob had mentioned the difficulty of taking on some of these trades. For those of you that aren't familiar, I have my own strategy that I use called the Matador strategy, which uses an ultra S&P position. And I have to say, even my years with the system and managing assets, I still had to swallow a little bit taking on that position a week or so ago, or just ramping that up. But that's what it comes down to, is just following those signals, even when it doesn't necessarily feel good, because that's what the system's calling for. It's that process over attitude, and now I'm invested, and I've taken on some new gains just this last week with that.
Yeah, and I think along those lines, it's just this stuff isn't supposed to make sense. If it did, it would be easy and everybody would do it. These are the hard trades to do. It's a hard analysis to be done. I mean, I saw I just happened to turn on and I saw Harry Dent on. It's really kind of funny. He was talking about that within the next year the Dow Jones will be at 10,000, so down 6,000 points, or basically a 60% drop in prices. And it was funny just to even hear someone say that somehow in his mind, I guess he wants to make that prediction. So if he's right, he'll be, I don't know what he's expecting to get from that. But the reality is that it's one of the quotes that I always sticks in my mind, and one of my old mentors and people who were in my past used to always say, expect more of the same until the market shows you something different. And it's not showing us a thing different. And in fact, other than the case in 2010 through maybe 2011, where things were really choppy and directionless, while the indexes were showing some gains year over year, there really wasn't any real trends other than some sharp movements inside of those years and that volatility. It wasn't until 2012 where we saw this next leg really start to develop. And so we saw 2012 until this year, we saw some consolidation for the first quarter and a half or so, and now we're seeing this thing break out again. I'm going to bring up a chart. I'm hoping that I'm just going to bring up the chart here so I can start to develop some concepts here, and I'm going to attempt to make this larger. It doesn't seem to want me to make it at the level that I need it to be, but I can make it I can scroll down a little bit. One of the concepts, that's why I was hoping that when Mitch was talking, I was unable to get this thing here, but I'm going to discuss some of the elements that happens, and I actually can go over to the TradeStation screen to do this. I actually have a thing called monthly here set up, and I can blow this up so I can get this to a little better level, and this is going to give us a pretty good perspective. And I'll bring up the whiteboard just so I can show you some of the things that when I saw this, there's a theory here, and it's the Elliott wave theory. I'm going to draw this, and I'll take things back and forth here a little bit. I'm just going to draw this pattern out right now. And this is the top of this first arrow here. Let me just get I'll make some arrows here. That's going to be one. This was a corrective phase, it turns out. This is at 2011. Here's the bottom of 12 I was just talking about, this last arrow. And then we've entered into this sharp uptrend. And there's some pretty amazing stats to look at here. And I'm trying to figure out where this wave 3 is going to end, and I will bring a couple other things into perspective here in a minute. But this element here, a classic 1, 2, 3, there's a relationship, and I'm not sure, this thing does not give me a text case, but there is a relationship here that I need to recognize. And this first leg from the lows in 09, let me just bring this back up. The low in 09 here was at the 666 point something, and this was 1219 high. the length of this first leg was 553 points. And the theory of Elliott states that there's 5 waves in a direction. We just talked about that there's 3 on the screen right now, which would suggest that there's a wave 4 correction, and that there is also a wave 5 advance. And so the rule is that 2 of the waves will be somewhat equal and 1 of them will be extended. Well, it's pretty simple. If I'm counting this as a 1, it's pretty easy to see that this thing is longer. And in fact, I'll give you some numbers here. And I was hoping to have, the text editor I can bring up I think is too small. I need to figure out how to, so I can type some of this stuff up on the screen. But I'll put some of this in commentary once you've seen this, and you can go back and watch what's going on here. I think that this is important to understand, and this is where these numbers came up with. And remember that in 2011, I was talking about 1905 when that seemed pretty ridiculous, as I remember. I remember writing it down, when the market was at 1,200, that somehow we're going to rally 700 points on the S&P, and it seemed somewhat ridiculous. And then as we stepped through, there was a real big key pivot number that you may remember back a ways, but it was 1656. And I said if 1656 was taken out, then that sets the tone for a whole nother leg up. You're seeing those events unfold right now in what we said. So 1656 was like somewhere around here where I just drew the arrow across the screen, and now we're seeing this extension, and because that was the 1 and 3 would be equal at that level, and when it exceeded that, then that was telling me that it was extending. It was also telling me that it was a wave 3. It wasn't a corrective wave anymore. And this was the old highs here at the 1576. So when we started to take out all these numbers and the extensions and all the characteristics of these waves started to change, that's when you started to realize that's where the 60% probability we're going to 1905. Well, we're now in 1961 and moving toward our other objectives we talked about. But there's some other numbers here that I'm going to go off screen here just so I can read them, so I can look down the papers. You don't have to watch me read. But the characteristics were for when wave 3 is going to be a longer wave or extended wave. The ratios are usually used with a Fibonacci number, and they're typical ratios of 1.382, 1.5, 1.618, and 1.76 times the length of that first wave, which was 553 points. Well, the interesting thing is 1.382 came up to 684, and the low, let me put that on the screen here while we're talking, the key low at the bottom of 2 was 1010. So it makes the calculations really, really easy. So that said we're going to be somewhere around 1695. And then the other ratios were 764 and 894. And the extreme, the 1.76 calculation, is at 976. So that comes up to what number? 1986. Objectives I have talked about earlier, 1989. So here's a calculation that came off numbers. Only 2 numbers were being used, which are the 553 length, or the length of the 09 low to the highs in 10, and then calculating all this stuff from the 1010 low, which was labeled as number 2, suggested all of these events. So the 894 number was really basically 1904 if you add the 10 on the bottom there. So it was exactly that ratio, which was 1.618. Well, now we're getting an extension, and there's actually, these extensions can get really crazy. They can get into I think 2.14 and then another back to 2.382. So this thing could really extend, but I suspect, it's really hard to say, since it's very possible with the elements that we see from the VPM database right now that this will even be a crazier statement than anything I said in the commentary, was that this could be the midpoint of this wave 3 rally, which would suggest, that it wouldn't even come close to peaking out until the 2200, and then there would be yet a 4 and yet another 5, which would be, I don't even know what to say about that analysis. I'm going to leave that. I'm glad you can't see my face because I'm confused just talking about it. But the bottom line is, this is where these calculations are coming from, and then some of the more recent numbers. Let me take down this screen, and let's go over to the VPM screen, and we start to look at, I think I want to go to the weekly chart now. The weekly chart is where you're going to see these latest Fibonacci's calculations here, and you're going to see here that the target 1973 somewhat coincides with the 1986, 89. So this is this is based off the pattern himself that we're looking at. And maybe I think I said before I'd bring up the pattern finder, but maybe I need to do that so we can see that. But so the high-end targets then at 2034, 2072, which gets us into a potential wave 5. So I'm trying to think if I've got a good enough chart that I can map this out and show you what's been going on here. I'm gonna do my best effort here off of this graph here. So when we're looking at this chart here, this is the 09 lows back here. So matter of fact, I'm going to go ahead and try this. This is the 5 waves I talked about, where I counted wave 1. This big, I'm drawing an arrow underneath it. This leg right here is where wave 1 was. One of the characteristics of this wave is that this next period is that these are all corrective in nature. So this arrow up is going to be wave 2, and then we get into a series, and this is where the dynamics of probably every one of these tops, and just drawing them in here, look like this could be it. This could be the end of this particular rally. So then we saw an expansion here, and then we saw the same pattern again, this stair-stepping of this trend, and then we see another expansion, and then here's a stair step, and now we're seeing another expansion, and this thing continues to unfold. And what I'm going to attempt to do here on this chart is to give you a perspective of what's happening with the from the wave count standpoint that hopefully will give you the context. I know this is pretty technical, but this wave 3, what it appears to me has happened, this period right here, I'll draw through this and I'll take these arrows out of the way. This is, I'm just going to bracket this out here, this little square out area. In fact, that's just useless. Let me try redoing that. Let me, this area right here that I'm putting a box around, this is the wave 4. So we got 1, 2, and then we got 3, 4, and now we're in wave 5, and that's where this thing is suggesting that we could see the move up. And the numbers on the downside, this number right over here is 1737. So I guess everything is pointing as we go through this, pointing that if the concept that I was talking about, waves 1 through 5, 1, 3, and 5 are going to have a relationship. 2 of them are going to be somewhat equal, 1 are going to be extended. We've got wave 3 as the extended wave, so that would suggest that the next wave So if this is where the arrow is on the upside here, where this arrow is, that would be the bottom of wave 4. If that being the case, then you're looking at a 553 point rally from that point, which puts you into that 2220, 2290 level. And that would complete this particular sequence, but it would not complete the entire sequence on the upside from that standpoint, but it would be pretty close to getting to an extreme in this market. And so hopefully I haven't just completely confused you. I know this is really technical, but these are the things that are pointing to why this is going to happen. Maybe you have to watch this 2 or 3 times if you can handle it, but it's these are the things that are going to happen. So I'm going to go over to back to the monthly graph and talk about the PPMs, talk about what's going on with all of the elements that are here. Is that you're seeing this trend expansion. We're seeing trend expansion on the long-term level. The monthly charts are seeing trend expansion on the a trend expansion on the intermediate level, and on the short-term level, we're just kind of neutral, flat with a slight bias to the upside at the moment. But the big trends that are driving this market right now are this one here, the expansion here, and then this weekly trend, which I'm bringing up right now. This is that expanding trend, 0.51, 0.46, 0.34. So the 21 is playing a little catch up yet, but we're a little ways from seeing this thing actually start to indicate that there's any sort of top. So possibly in that range that I talked about, we could see a minor completion of this wave 3, which would be the numbers that I had in commentary, 1973 to 1989. We could see a little consolidation here that would unfold for several weeks, maybe 2 to 5 weeks, we'll call it, in a sideways range, a choppy sideways range, and then a resumption to the upside to move up toward this 2018, maybe as high as what do I have here? I'm going to look down on my sheet here. As high as the 2070 level. And so that would complete this wave 3. So wave 3 is likely to complete somewhere between the 2018 and the 2027 level, and then we see a consolidation. Meanwhile, this is important to understand, while the market's consolidating, does that mean the market's not going up? No, because when you're looking at the individual stocks behind the scene, while the indexes, which are heavily weighted, we went through the weightings a couple weeks ago and going through the top 25 S&P, while those are really the weightings, we're seeing a lot of the back ends of these indices starting to rotate, such as IJR and all that. So I've just been going on and on since we got 8 minutes to go. I want to bring up IJR because I think that's an important, we talked about looking at that a little bit ago. And you'll see the IJR is just getting at the old highs. It's down a little bit today, but we've got objectives here as well. Let me bring that up, make sure. I want to move this away from me a little bit. So the objectives here for IJR, it's currently at 111, is 119 to 122 on the upside. And so that's a pretty decent expansion as well. It's a little tighter than what we're seeing on the S&P, but as we've talked about, this index is lagging, the S&P is now leading, so that's just illustrating that to go on. PPMs 0.3328 and 0.28, so we got all trend modes on all 3 of these levels. And as quickly as I can, I'm going to bring up the whiteboard real quick just to show you. This is the pattern. It's a similar pattern to the S&P going. We're just going to go in this most recent rally starting in 11, but the big traction happened in mid-2012. I'm just drawing this out. Same stair-stepping pattern that we had in the S&P, and then this, you get an expansion, and now we get this pattern, this last pattern here. I don't know if this is going to work. No, not going to work. But this last expansion here, this last pattern here is an A, B, C. This is wave 4. It's starting wave 5. Well, wave 5 in this indice could be equal in length here as well, since this big, I'm drawing a big arrow here, this is going to be wave 3, and then we're working on wave 5 on the upside now. So those are from the standpoint of what's going on in this trend, the same trends across the board, all PPM expansion, everything that's happening. These are things that are sacred to me. These are the VPM postulates, if you will, from the standpoint of this was geometry. These are all the theories that actually drive what makes VPM work, and what I've spent my lifetime in developing and understanding how these markets work. And it's just this is I think pretty phenomenal. I've never had the venue which to be able to talk like this to lots of people and be able to see to give you the view of what's happening and go through this great detail. That's why you can see right now I just spent an hour talking about this stuff, that it would have been I saw myself not going to sleep last night, and that was part of the problem with writing this up as I was seeing. So bring Mitch back on for the last 4 minutes. So Mitch, anything I said that you were able to pull up that maybe you thought was worthy of summarizing?
Well, just what you had said about the VPM database, how its targets when it comes to the VPM universe, having the expectations of about 17%, and you take that 500 from where we're at right now, or to put us towards that 2300 range, that's almost exactly 17% of gains between now and that point. So it'll be interesting to see, as we go forward, how the VPM universe, as far as that trades, lines up with the actual gains that we see when it comes to the market.
Yeah, and one of the things in the trade profile we didn't really talk about, but the expectations, the average, there were a lot of 1-2 buys.
Yeah.
And let's see, we got a minute here. Let's flop back over there, because I think that. Are you grabbing my mouse?
I'm not touching it.
Okay, there you go. Yeah. So what I want to try to do here, after doing all that, I forgot the great thing I wanted to show you. So from the standpoint of looking at the database again and what's going on, see if I can get 2.0 to come back up. There it goes. To look at what the rotation that's going on is really key. So if I go to the research and I want to go to all stats, I want to talk about the expectations. So 1.2 had all these buys. Let me slide this over. We had
it's pretty much 10 to 1 on that. Yeah.
Yeah, but the average gain on the weekly 1-2, average profit is 29%. So the average symbol that we just bought, 33, has doesn't mean that will happen, but it does suggest that the profile says that a 29% gain. So some will, some won't. Probably if you do 60-40, you probably end up with about a 17% gain. Would be my guess. 40% of them won't achieve their goals, and some will exceed, and some will fall a little short. In the end, there's a big projection here for 3,300 stocks to go that way. The current average profit is only 7.6%, and of the fulfilled right now is only 22% of the gain. So we have a lot here. I talked about this last week as well. So
yeah.
In conclusion, I think this just continues to point to why you have to have not only a sell discipline. A lot of people talk about advance and protect, or PPG, whatever you want to call it. The reality is you have to have both a buy discipline and a sell discipline, and you have to adhere to both to make this thing work. And the worst thing that happens is paying attention to the sell discipline but not to the buy, and then you just lag the market big time. So you've got to participate here. If this thing that I've talked about today in detail is going to happen, that's what it's all going to be about. So anyway, we'll think about what we did today. We'll come up with some ideas or some things I want to talk about, and then tomorrow we have Process Warriors, which is going to be at noon Eastern Time. I'm not sure exactly what we're covering. It's just kind of a continuing saga of going through utilizing the system at this point in time and understanding things. I think the theme will probably be centered around the activity that we're seeing in the database and how to actually interpret these things to be able to best adhere to the process. That's always the hardest part. Discipline is tough. Doesn't matter what it is that you're doing. So anyway, folks, this will complete the show. We want to thank you for coming and spending some time with us today. Look forward to you. If you've streamed it, please also give us some comments on things that you think we should be covering. Thanks a lot. Have a great day.